Good morning, everyone. Whether you're just starting your day or already deep into your morning routine, we're here to help you make sense of the financial world and how it touches your life. It's Wednesday, January 14th, 2026, and we're diving into the stories shaking up Wall Street. The energy here is electric, with traders reacting to every headline and investors watching every tick of the market. But what does all this activity mean for you, your family, and your future? The stock market isn't just numbers on a screen. It's a living, breathing force that impacts your savings, your job security, and the broader economy. When markets move, so do the opportunities and challenges for everyday people, from families planning their budgets to workers thinking about their next paycheck. Maybe you're saving for a home, planning for retirement, or just trying to stretch your paycheck a little further. The ups and downs of the market can affect everything from your mortgage rate to the value of your 401k. That's why understanding what's driving these changes is more important than ever. Today, we'll break down the biggest stories in simple terms, whether you're an experienced investor or just curious about where your money goes. We'll cut through the jargon and focus on what really matters to you. Inflation is front and center, affecting everything from groceries to gas. Prices at the supermarket and the pump are on everyone's mind, and we'll explain why costs are rising, what's being done about it, and how you can protect your wallet. We'll also share practical tips for managing your budget during these uncertain times, so you can make smarter choices for yourself and your loved ones. We'll also look at earnings reports from major banks. Think of them as financial checkups for the economy. These reports reveal how healthy our financial system is, and what it could mean for lending, interest rates, and your ability to borrow or invest. Plus, the healthcare sector is buzzing with innovation, from AI-driven research to breakthrough weight loss drugs. These advances aren't just headlines. They could change the way we live, work, and take care of ourselves in the years ahead. And it's not just finance and health. A burger chain's hot streak is shaking up the fast food world, and a key Canada-China meeting could have ripple effects for trade, jobs, and the global economy. No matter your background, understanding these stories helps you make informed decisions, whether you're investing, saving, or just trying to keep up with the news. So grab your coffee. Let's see what's moving the markets and what it could mean for you. Stay with us as we break down the headlines and help you navigate the world of money, one story at a time. First up, let's talk inflation. It's a word we hear almost every day, whether we're watching the news, shopping for groceries, or filling up at the gas station. But what exactly drives those price changes we all feel? One of the most important clues comes from a key economic indicator, the Producer Price Index, or PPI. The PPI measures the average change over time in the selling prices received by domestic producers for their output. In simpler terms, it tracks what businesses pay for the goods and services they need to operate, before those costs ever reach us as consumers. This makes the PPI a kind of early warning system for inflation, giving us a glimpse into what might be coming down the pipeline. Imagine a factory that makes breakfast cereal. If the cost of wheat, packaging, or transportation goes up, the factory's expenses rise. The PPI captures these changes. If enough businesses start paying more for their supplies, it's likely that those higher costs will eventually show up in the prices we pay at the store. So, when wholesale costs rise, it's a signal that higher prices could be on the way for everyday items, like food, clothing, and electronics. On the other hand, if the PPI shows that costs are falling, it might mean some relief is coming for our wallets in the near future. That's why investors, economists, and policymakers pay such close attention to the PPI. It's not just a number. It's a signal that can influence everything from the interest rates set by the Federal Reserve, to the value of the dollar, to the rates on your mortgage or car loan. When the PPI is released, it often makes headlines and can set the tone for the entire financial market that day. A surprising number, either higher or lower than expected, can send shockwaves through Wall Street and Main Street alike. For example, a lower than expected PPI might boost optimism among investors, suggesting that inflation is cooling and the economy could be stabilizing. But if the PPI comes in higher than forecast, it can spark concern, leading to market volatility and worries about rising costs for businesses and families. Just yesterday, the S&P 500 dipped as traders braced for the latest PPI report, reflecting the anxiety and anticipation that surrounds this key data release. The market's reaction shows how interconnected these numbers are with our financial lives. In the end, the Producer Price Index is more than just a statistic. It's a vital chapter in the ongoing story of inflation and its impact on our wallets, our investments, and the broader economy. By understanding the PPI, we gain insight into the forces shaping the prices we all pay and the economic trends that affect us every day. Today, we're taking a closer look at the financial powerhouses that help drive the U.S. economy: Bank of America, Citigroup, and Wells Fargo. All three are reporting their latest earnings, and Wall Street is watching closely. These aren't just any banks. They're industry giants whose performance can ripple through the entire financial system. Their quarterly results offer a window into the health of the broader economy, from Main Street to global markets. When these banks post strong numbers, it often signals that businesses are borrowing, consumers are spending, and confidence is high. On the other hand, weaker results can be an early warning sign, hinting at economic slowdowns, tighter lending, or growing caution among investors and consumers alike. That's why analysts, economists, and investors pore over every detail in these reports, looking for clues about what's next for the economy. It's not just about headline profits. Investors are digging into the details, like how much banks are lending, whether investment banking divisions are thriving, and how credit quality is holding up. Loan growth, in particular, is a key metric. Rising loans can mean businesses are expanding and consumers are confident, while a slowdown might suggest caution is creeping in. Recently, bank stocks have been on a tear. Citigroup shares have jumped 21%, and Wells Fargo is up 18% over the past few months, reflecting optimism about the sector's resilience. But with earnings day here, some of that momentum has paused as investors wait to see if the numbers will live up to the hype. The stakes couldn't be higher. A strong showing could reignite the rally, while disappointing results might trigger a wave of selling and renewed uncertainty. For traders and executives alike, today's announcements are a pivotal moment, one that could set the tone for the entire financial sector in the months ahead. As the numbers roll in, the market is on edge. Investors, analysts, and even policymakers are watching to see if these financial giants can deliver the results that justify recent optimism. The outcome will shape not just bank stocks, but potentially the direction of the whole market. In the end, the performance of Bank of America, Citigroup, and Wells Fargo today could spark big moves across Wall Street, reminding us just how much these institutions matter to the financial world. Let's zoom in on Bank of America and Citigroup. Bank of America reflects the American consumer: spending, mortgages, credit cards. Its stock is up 12% in 3 months, but investors want proof the momentum is real. Citigroup, with its global reach, is a window into international trends. Its stock soared 21% recently. Both stocks have cooled off just before earnings, classic investor caution. Today's reports are the moment of truth. Will optimism pay off, or will expectations need a reset? These two banks are key signals for both the U.S. and global economies. Seen trimmed for focus. Rounding out the trio, Wells Fargo's turnaround is under the microscope. Its stock jumped 18.5% in 3 months, reflecting renewed confidence. As a major mortgage lender, its results offer insight into the housing market and small business health. Like its peers, Wells Fargo's stock hit a high, then pulled back. Investors are cautious. A strong report could validate its comeback. Disappointment could trigger a sharp reaction. Today's numbers will show if Wells Fargo's recovery is real. Seen condensed for clarity. Shifting to healthcare, the JPMorgan Health Conference in San Francisco is generating major buzz. Pharma giants, biotech startups, and investors are unveiling breakthroughs and forging deals. The healthcare sector is up 15% in 3 months. Investors are betting on innovation. AI and drug development and new weight loss treatments are hot topics this year. News from this conference can move stocks and shape the industry's future. It's a powerful reminder of how science and markets intersect. Seen trimmed for focus. Two companies making headlines: Novartis and Amgen. Novartis is using AI to speed up drug development, analyzing data faster and designing better trials. The CEO cautions it'll take time, but the potential is huge. Novartis stock is up nearly 3% this year, hitting new highs. Amgen, meanwhile, is making waves with its experimental weight loss drug, MariTide, a once-a-month injection showing strong early results. Amgen stock is up 11% in 3 months, though it's pulled back recently as investors take profits. Investors are closely comparing MariTide to rival drugs. These stories show how innovation drives both health and market gains. Seen condensed for clarity. Beyond banks and biotech, two stories stand out. Shake Shack's stock is on a 9-day winning streak, up 23%, a rare feat driven by optimism and momentum. Sometimes, a stock rallies simply on positive sentiment and fear of missing out. Meanwhile, Canadian Prime Minister Mark Carney meets Chinese President Xi Jinping today, a key event for global trade. Canada's stock market is surging, with the EWC fund up nearly 40% this year, hitting new highs ahead of the meeting. Diplomatic moves like this can have immediate market impact. It's a reminder of how global events ripple through markets everywhere. Scene trimmed for focus. After all this news, what matters for you, the everyday investor? Inflation data affects your wallet. Bank health signals economic strength. Healthcare innovation points to growth opportunities. You don't need to be an expert, just connect the dots between headlines and your financial plan. The market is forward-looking and often volatile, so keep a long-term perspective. Don't react to every swing. Focus on your goals and strategy. Staying informed is your best tool for smart decisions. Today's stories are all pieces of a bigger economic puzzle. We'll be here to help you make sense of it all.